Hello, owner managers. This is Martin from LRK Tax. Hope everyone is doing well. I suspect everyone's super busy, so I'm going to keep this super short. So this little video is to show owner managers how much of a change these new rules have on their business and their ability to claim the CEWS. This particular video is really to talk about this concept of baseline remuneration and how it's going to affect you going forward. So very quickly, under the old rules, owner managers had to have something called baseline remuneration in order to get the wages for themselves and the people that they don't deal with arm's length subsidize. The reason for this is because the government doesn't want you not to pay yourself, historically any wages, and when this opportunity comes along, start all of a sudden pay yourself a salary and then get it subsidized. So what they do is they say, you know what, before this happened, you had to have some remuneration from January to March 15 of 2020. So if you paid yourself during this period, your average salary during this period would be used as a limiting factor in terms of how much you can get in terms of subsidy. So if you paid yourself, that's great. If you didn't, it doesn't matter how much you paid yourself post March 15th, you will not get subsidized. So with the new rules, this concept still applies, but what's beneficial is that no longer are you required to calculate your baseline from January to March 15th of 2020. So for example, if you paid yourself sometime in 2019 but forgot to pay yourself in the first 2.5 months of 2020, you were not eligible to claim the CEWS because you didn't have baseline in that period. With the new rules, the amount of salary that you paid yourself in 2019 is now going to be accounted for. Very quickly, the way it works is that for periods 1, 2, and 3, you can continue to use January and March 15 to calculate your baseline, but if you didn't pay yourself any salary during this period, you can use March to May of 2019 to calculate your baseline. For period 4, March 1st, 2019 to June 2019, or you can choose to use March 1st, 2019 to May 31st, 2019 to calculate your baseline. Finally, for periods 5 to 10, July 1st, 2019 to December 31st, 2019. So these alternative periods to calculate your baseline remuneration allows people a little bit more flexibility, because if you didn't pay yourself in January to March 15, 2020, you're out of luck. But with these new rules, if you didn't pay yourself from January to March of 15, 2020, but you paid yourself during these periods, you might have a shot at getting your wages subsidized. So I'm not going to go into how the whole concept of baseline remuneration works, but suffice to say that you need that to get your wages subsidized if you're the owner manager or if you're paying someone who is related to the company. So as an example, let's use James. He's the sole shareholder of BJJ Inc. Paid himself $1,000 per week in all of 2019. But in 2020, he was cheap. Well, he's not cheap. Just didn't want to pay himself. He was lazy. He started paying himself dividends because he didn't want to deal with the source deductions. So now he's wondering whether he can claim the CEWS. So under the old rules, because he stopped paying himself in January to March 15 of 2020, very easily said, you can't claim any CEWS because there was no baseline, right? There was no history of him paying himself. So the government doesn't want to allow these owner managers to get the benefit of the wage subsidy. But under the new rules, because he paid himself in 2019, you can now calculate the baseline remuneration based on the wages paid in 2019. So he can now claim the CEWS. So that's a very high level example of how this works for owner managers under the old rules and the new rules. So some considerations are these rules take effect retroactively on April 11th. So this is very, very important because, under the original old rules for periods 1 to 3, you might evaluate yourself and say, hey, I don't qualify, and then just move forward on a prospective basis. But because these rules take effect retroactively, you should go back and see whether or not you qualify for those historic periods 1, 2, and 3, by using any salaries or wages paid to yourself in 2019. Again, if you didn't pay yourself in 2019, obviously it doesn't work, but at least now it's something to think about, that you can go back and calculate whether you're eligible to claim the CEWS for periods 1, 2, and 3. So in order to do this, you have to file an election. It's one of the many elections that's available, but again, very important to make sure you cross your T's, dot your I's, because if you don't, CRA might come running and just say, hey, you know what, you didn't do this right. Give me my money, give me my an additional 25%, and I might just shame you. So again, cross your T's, dot your I's. That's what accountants have to tell you So I'm telling you that to make sure you file your elections. What happens is there's a little bit of uncertainty as to whether such election applies to the entity as a whole, right? The way the legislation works is when you file this election, are you using baseline, your 2019 baseline, to be applied to all employees, or are you going to be applying it on an employee by employee basis? For example, let's just say there's a husband and a wife. So is the husband didn't pay himself in 2020, but paid himself in 2019. So the corporation files the election, uses the 2019 as the baseline to calculate baseline, and really the uncertainty is whether that 2019 is going to apply to the husband and the spouse. So there was some confusion about that, but it seems like based on what's been released is that it's going to be filed on an employee by employee basis. So continue on with their example. If the spouse did not pay herself any salary in 2019 but paid herself in 2020, so kind of vice versa with the husband, basically only the husband is going to file that election, and she will continue to calculate her baseline under the old rules. Again, I'm using a very basic example. If there's like many non-arm's length people dealing with the corporation, you might have to file multiple elections. Again, elections are super critical, so make sure you identify anyone who has to file these elections. So finally, make sure to subscribe, like, and follow us. It's the thing I have to say with every video I do. Again, hope this was just a short video that enlightened owner managers about the new possibilities for the CEWS going forward, as well as going backwards as well. If you have any questions, again, please reach out to us. Thanks, guys. Take care.